Good morning, folks. It's tough to bet against the dollar and crypto and gold and oil in general, considering what's going on in the world in geopolitics. Syria and Russia against Ukraine and all the implications of that, not only for various commodities, including energies, but just geopolitically and in terms of currency. So having said that, we have been long on the euro and the pound. I've now hedged my positions. We have a very small loss on the euro, which is now locked in, and we have a small loss on the pound, which is locked in. I don't know which way these are going to go, and the best policy, if in doubt, hedge, has been applied. So we're now sort of neutral on currencies, although we do hold a short position on dollar yen. Let's have a look at what the dollar index has just done. It's just bounced off this triangle breakout line top, as you can see. That's a perfect breakout pullback. I was hoping for us to get a little lower so that we could take some profit or even break even on some of my positions. But we bounced off the top triangle line. We didn't get to the bottom and the 50-day moving average, so be it. Let's see where we go from here. We're sort of in the middle now. There's the top. The bottom is now below us, and we're in betwixt and between, diddling in the middle. That's why I've hedged my currency positions, and we'll wait to see what happens now. On the euro, let's see what might happen and what we'd be watching for. This low here is a really important low. Let's go to the weekly chart. Actually, let's go to the 12-month chart on the euro, and that's what it looks like. It's quite interesting, actually. We've got a triple bottom apart from that spike down there. We have two lows there in 2016, 2017, and now in 2024. We've got a little spike forming here currently at the same price. Now let's go back to the day chart and see what that looks like on the short term. So also just sort of dribbling down, but not really, no momentum really. If you look at this for the last 3-4 weeks maybe, we've been going sideways on the euro, but looking weak, looking like it's wanting to go down. So let's see how we go. Same with the pound. I was hoping the pound could get a little bit more rigor, going up into the 200-day moving average right there. We did almost touch it and then fell back and forming a double spike high there, almost a tweezer top. So again, warning for the pound longs, and hence we've hedged. I'll start to adjust these hedges as the price moves one way or the other, and look for opportunities to bias these hedges in the direction where this trend eventually ends up going. On the dollar yen, we're still short. We've moved up to the trend line. I still think this carry trade unwind might even have another go at it. We could see another dramatic drop, and we might actually see the stock markets acting in sympathy with that. So if we see something very similar to what we saw last time, this huge unwinding that took place in July into August, and if we see a similar unwinding here, that will move down. And if you remember, in conjunction with this move down on the dollar yen, we saw the stock markets come off by, I think, 12 or 15%. So let's keep an eye on all of that. And this will play a role in the stock indices and things like gold and various commodities that we're trading too. Remember, a lot of these are contingent on the dollar itself. They're all priced in dollars. Everything that we trade, almost everything, is essentially priced in dollars. So whatever the dollar does directly actually affects all of our trades. Let's have a look at stock markets. We're short from the top on NASDAQ. We didn't quite get up to that blob that I thought we might reach. We fell short of it with a bearish engulfing candle, actually a dark cloud cover candle on Monday, and then also repeating yesterday with a slightly lower low. So we're pretty good on that one, and I think if that carries on moving down, we'll look to take profit somewhere down near the trend line. Let me just revert back to that. Somewhere down near this trend line, the 50-day moving average, there's the 20. So somewhere in this zone here, probably around about the 20,200 to 20,400 level. But if we should get a breakdown through there, we could aim for this next order block just below there at about 19.8, something like that. Maybe 19.5, and then also the 200 period moving average and this next order block. So it's all up for grabs at the moment. Of course, these markets are incredibly overbought and overpriced in general. So probably due for a correction or a pullback of some sort, but how much and when that will occur, we don't know. So we may get some shorts on S&P later on. We're also short the German 30. This one almost reached the touch point of that trend line. Let me just zoom this out. It's a sort of a channel line at the top here, just connecting those two peaks, and somewhere down here as well, another peak. So just almost reaching there, not quite getting there. So we might see another quick surge up to touch that line at about 20,800. But currently we're trading at 20,300 and looking for this to move down. The candle on Monday was quite encouraging, also a dark cloud cover candle pattern. And yesterday sort of validated that by closing below it. Let's see how we go today. So we're short on German 30, short on NASDAQ. We're also short on Tesla, maybe looking to hedge that if that carries on moving up. Not a big position on there. We're short on NVIDIA. Actually, we were short on NVIDIA. We took profits on that. I'm not sure how that's going to go. And that adjustment's more or less just to try and mitigate risk overall. as we move into a very uncertain period towards the end of the year. December's generally a fairly low volume period, which is subject to potential fluctuations. And also, we've got the inauguration in January, plus all of the stuff that's going on in Syria and Russia and Ukraine. So all sorts of dangers in the market, which could be dangers to the upside or the downside. We don't know. And it's very uncertain. And all of these conditions that are prevailing currently, we haven't often seen before in such concentration or configuration. So pretty interesting times that lie ahead, especially with what's going on with the transformation into the new US government and all these talks about cost-cutting and Doge and the DOJ and all sorts of interesting things going on there. We won't comment on that. Let's go to Bitcoin. If anything, I think gold and Bitcoin will probably be beneficiaries of all of this. So we went long on gold at about 26.50. We're now at 26.95. So that's going okay. That's in addition to that earlier position which we had closed. We're also still long on Bitcoin, having added some more on these dips. So we're back to about a 40% holding on Bitcoin in terms of size in comparison to what we had on before that huge rally. We've taken loads of profit on Bitcoin, and we don't want to give too much of that back if this should reverse. However, I do think, and please have a look at X and my previous video actually, this candle here was a bit confusing for a lot of people. It's seen as a wick high, but it was also a wick low, and that got a lot of people out of that trade with a 12% whipsaw in one day. We saw something similar on Monday with a big pullback. Now we have a tweezer bottom. Tuesday formed another spike low at the same level, and we're now moving up. All the time holding above this very short-term trend line despite these wicks. When I say holding, I mean closing above there on a daily basis, and we are still doing that as we speak right now. So still long and strong in Bitcoin until otherwise proven. And actually I did a fractal on this. I'm not sure where I put it. Let's see if we can find it. And indicating that we could reach up as high as about 130. There's the fractal. I actually deleted it. So look, on this occasion in 2020, we started off with a big rally like we've had recently. That we then consolidated for quite a period of time. I think it's about 2 or 3 weeks over here, dipping down quite sharply. Multiple spike lows on the daily, like we've got currently at the moment, over there and there and there, and then the rally upwards. Now, if we extrapolate that and use that fractal, interestingly, notice that we formed a double top here thereafter. But if we take this fractal and duplicate it and put it onto where we are now, it's not exactly the same sort of shape, just squeezing these charts down here. So we're going to take this one, that's a duplicate of that one, and kind of align it with where we are now. So you can see it's not exactly the same shape, but there's the big move up, the consolidation, and then the next move up. Now, this doesn't adjust for percentages because, the price is very different down here compared to where we are currently, and this is a log scale, so it sort of distorts everything. But what I'm trying to say is the top of this fractal is at around about $126,000 per Bitcoin, and I think that's where we could actually end up with this move. Remember, this move then went up, came down very sharply back to the original breakout point, which would make sense in this case. And if we go back to what happened on this occasion, we formed a double top, a fractionally higher high there. We may well do the same. We could move up just above there, the next move just slightly above there, maybe 130 before the big move down that we saw previous to that. That's just a fractal idea. These are not predictions. These are things that have occurred in the past that may reoccur. I do believe that things repeat and patterns repeat because of human nature, and I think we could see the same sort of thing on Bitcoin. I know why I deleted it now, because it just messes up my whole chart. Let's get rid of this. Okay, so Bitcoin holding up pretty well there. Ethereum, we also kind of like this. We've been in some long trades on this. We took some really good profit on Ethereum, and we may just have a go at buying that too later in the day today. We'll be watching that closely. I think we could get up to about 4,300, 4,500, maybe 4,800 on Ethereum. Let's see how we go. But our main trades on this are Bitcoin and also long on gold now. I'm being pretty cautious on gold right now. When there's a risk-off environment, in other words, when people start piling into risk assets like some stocks, like Bitcoin, for example, has been considered to be a risk asset in the past, we may see some of these things come off. So remember, gold is a risk hedge, and if people continue to pile into risk assets, gold will probably suffer. But if people start to move back out of risk and into more secure type holdings, then gold should profit. I think given everything that's going on in Syria and the Middle East and Russia and Europe and all the conflict and chaos that's going on, that gold should not fall back too much and should keep a bit of a bid underneath it. When it comes to platinum and palladium, these have been very disappointing. I've got not much to update on these apart from what I said in the last video. We're trying to hold these smiley faces, not very well at the moment. Look at palladium, for example. How many days is this going back to 26th of November? We're now the 11th of December, so 2 weeks basically, just moving sideways across the page. You could see this as coiling or consolidation for a bigger move up. There is some jittering going on right now at the moment, and a big bit of a spike low. Maybe we're moving up. Maybe this is the bottom. We're trying to form a flat bottom for a breakout through the top. If we break out through this level here and close above 997, let's call it this next one up here at about 1,000, somewhere in this region. First of all, we want to see a close above about 997, these levels here, the 200-day moving average, the 100-day moving average, and this flat top. Then we want to see a breakout above the 50 and this next flat top at about 1044. Let's see how we go. I think we're going okay on that so far. I do think that platinum and palladium have got a relatively bright future ahead of them, given all of the supply side and demand side considerations about this. So let's keep on holding on to those and see how we go. We might have to hedge these if they drop down further and form a decisive break, but there's plenty of space below us before we get to that point. For example, on platinum, I'd have to see a daily close below about 900 on platinum, and palladium we may be a little bit closer. If we get down below, let's say 918, we might consider hedging that too. Right, going across to some of the energies, natural gas doing pretty well, I think, moving up nicely. This is a black bull chart, the NYMEX Henry Hub futures, and just holding up a bit of a dip, just closing that weekend rollover gap there, dipped down slightly lower than expected, and then bouncing up again quite nicely yesterday, and today keeping that bid on. I continue to remind myself that I must allow for this dip down to this next level, but I don't know if we're going to get it. I think we may hover around here and then begin to dribble up or melt up. I haven't added any further long positions to this, although I was tempted to yesterday, but I've got about 50% size on this compared to my previous long position that we had right from the bottom at 2.23. So I consider $3.20 to be pretty expensive for natural gas already, so I don't want to be holding too much on the long side. Although there is a chance we could go up to 3.8. That's the 200-week moving average, which I pointed out in the last video, which I will link at the top of this one right now. If we get through 3.8 and hold above there, we could even see 4.2 to 4.4, something like that going forward. Right, now on Brent crude oil, we've just taken actually we're trading WTI today, we've just taken our profit on this and waiting for this to sort of move along a little bit. Now, I don't know, generally we've taken a lot of profit on oil, been shorting at all these red arrows, and now we've just exited the last short. It may be premature, I'm not too sure. We may just hop straight back into this if it doesn't break higher and continues to move lower. I think that if we get a breakdown below this flat bottom, and we can see the same on Brent crude, there's a flat bottom there too, we could see this moving down quite sharply down to the very low 60s and then eventually into the 50s and somewhere down here at this order block at about $44 to $50, somewhere around here. We've got to get through this current low where we are at the moment. That should take us down immediately down to about $62. And once we break and close below $62, we should see a breakout, pullback, retest from underneath, and then a move down to around about potentially $40 to $50. Just zooming in, you can see that this flat bottom is the one that we're talking about right now, that we've got to defeat first. And then the next flat bottom, well, double bottom really, is this one over here. And that one's at $61.72. So two levels to watch very closely. And at some stage, I'll be looking to add some more shorts onto this. Maybe even today. Right, going across to all the softs and grains. Sugar, we remain long on, nothing to update since the last video. Cocoa, we remain 50% hedged on this. I'll be looking to hedge the other 50% later on today, depending on how this opens on the IC. If we stay at this level or move higher, I'll immediately hedge the balance. We've still got a 50% long position on this, so that position's in profit, but the short positions are dragging behind it in a loss, so we have to decide what to do at this point. Moving over to coffee, we're still short there with a fairly small position. Watching how this works out today, and we may add another position on there to bring us up to about 50% size. I'm not too sure about this. When this opens as well, we'll check that out, but generally still looking for this to move down. And the candle yesterday was kind of encouraging, similar to that previous one over there, but that move down didn't last too long. Let's see if we can get another move down, maybe even a gap today like we had previously, move down to this trend line, and a break below there should see us putting some more shorts onto coffee, if that happens. I'm not saying it's going to. In fact, it's probably going to move higher, as it has been for quite a long time now. Now, soybeans we're long on, and really nothing has changed. I'm not going to update too much on these, as you can see for the last, well, we're trading at the same price that we were trading in August 2024. So there's not a lot to add to this, really, and actually for the last 2 or 3 weeks, we've been trading almost at the same identical price. So we remain long on that. We're long on wheat, just bouncing around here again. Not much to add. We have a position from there, trying to hold there, a bit of a double bottom. Can we get a move up? We'll start to look to hedge or take some profit in this zone here, up at around about 600 to 620. And then we're also short on orange juice. Once again, pretty boring. We need to break down below that trend line to start adding some more shorts onto this. We'll see how that goes. And then corn, our favorite one, we're looking to take some profit actually shortly. Well, not that shortly. Once we get up to about 4.5, we'll be looking to take some profit or hedge. Normally I'll just hedge this and wait to see what happens next. And we're in some decent profit. After that breakout pullback, there's the channel line, breakout, pullback, long, and we're looking for a move up there. That's the first point of resistance. Once we break above there and close above there, after probably a repeated retest of the top from the top side, we'll then be hedged most probably, and then we'll look to exit that hedge and start to weight it to the long side. The next move up after that should take us up to about 5 or 5.1, and then maybe even with a bit of luck we could get up into the sort of high 5s, 5.8, somewhere around there. We really want to hold this level down here. A break below 65, 66 and a hold below there could see cotton moving quite a lot lower. I don't think that's the most likely scenario. I think we'll probably try and hold here. We might even hold here today if we don't need to get even further down. And then what we want is a break up and a close and a bounce off the top of the red line, and then the same thing at the green line later on. Target for cotton, first of all, around about 81, and then moving up from there. Perhaps we could even get up into the 90 to 95 region. I don't know. We'll see how we go. It's very, very cheap, underpriced right now, and at some point it will get a bid. Otherwise, the cotton farmers will be going out of business. Going across to some of the other things, the rand pairs, not even worth mentioning. Pretty much a spidery sideways crawl across the page for weeks and months, and pretty boring. But we are short on the dollar rand, and we'll see how we go. Just to remind you, we're looking for this. I'll change this to the weekly chart just to make it simpler. That's the sort of pattern I have in mind. We've already reached that blob there a little prematurely and trying to move down. I think the next move could take us down to about 16 rands to the pound. We've got this swing low and the 200-day moving average, 200-week moving average rather, to contend with first. We could get a bit of a double bottom there, but failing that, a move down to the broader green channel line, which is the sort of outer sleeve of this whole affair that's going on here on the dollar rand. Right, VIX. We're long on VIX, of course. That looks like it might be trying to form a bottom. I see a lot of people starting to get long VIX. That worries me a bit. I see long VIX all over the internet, all over YouTube and Twitter. Maybe it's a little bit too crowded already, and we might have to see a quick dip down to slightly lower levels. Be careful of this one. It is receiving a little bit too much hype, but we've been long for a number of weeks now. We're also long on TLT, and this one's dipping back a bit in pre-market, as you can see. And we're looking for this to continue on moving up. And let me zoom out to show you the idea I've got in mind. And retail traders might not like this one too much because there are overnight carry costs and rollovers and that sort of thing. And it ends up getting quite expensive if it doesn't move for a prolonged period of time, like it hasn't been for now. We've been in this range really since 2023. We're still more or less where we were in December, about this time in 2023, a year ago. But we are long on TLT, we're long on VIX, we're short on the dollar rand. We've covered all the other things I think so far. If you enjoy this sort of content, I'd love your thumbs up, your subscription, and join the channel if you want to get these videos early. This one will be released 5 or 6 hours ahead of time. And go and check out all the links below the video. There's all sorts of stuff that I offer. Try and join our trading room, try it out for a month, and see the exact trades I take every single day, posted, logged, recorded precisely in the trading room. And you can join that. There's a link below. Take care.
Charts on flames, data be the dice man. CME floor, wristwatch precise fam. Market play got the NATGAS surge. Fingers on the trigger, yo, time to splurge. Downtown hustle, suit game clean. Vibes electric, screen buzz mean.